2, 1. Good morning, traders. It's October 2nd, and we're rolling into the last stretch of the week with a market that still hasn't made up its mind going into Q4 of 2025. Futures are leaning slightly green, yields are still the pulse point, gold is firm at all-time high, and energy remains stuck in chop. Today we'll break down the macro currents, look at where money is rotating, and I'll give you 3 actionable setups you can trade straight off the bell: Nvidia, Costco, and Tesla. So everybody, let's dive in. So our overnight and futures recap: the S&P and Nasdaq are up around 0.2 to 0.3%, and the Dow currently sitting flat. Asia mixed, but tech was strong. Carryover momentum from AI flows. Europe, defensive bid in healthcare and staples. The dollar slightly weaker, helping multinationals. Gold steady near highs, hedge flows alive, and oil still stuck in a weak range-bound trade. This setup gives us an opening window for either breakout momentum or rotation into safety. Now I want to talk about our macro tones. Rates, the 10-year yield is still the deciding factor. Lower equals green light for growth and semis. Higher means risk. Then inflation optics, input costs and service inflation are still sticky, so any data leak could hit sentiment. Sentiment levels overall, fund managers are overweight equities and underweight cash. That adds fuel for continuation moves but also sharpens downside risk. And then commodities. Oil weakness is disinflammatory but good for energy names. Gold is firm, institutions want insurance. The open will be about how the market reads rates and inflation versus sector strength. Now talking about sector rotation. Tech and AI, semis, Nvidia, ORCL, AVGO remain the pulse check. If they run, Nasdaq can lead. Healthcare and defensives, bid remains steady. Names like J&J, UNH, large cap pharma quietly outperform. Then, consumer and retail, Costco and premium names benefit from sticky consumer spend and weak margin discounters lag. Financials, still capped unless yields push higher. Energy, oil weakness equals chop, avoid unless you scalp. Breadth, watch if small caps join or if it's just mega caps. That will decide if today's move sticks. Alright traders, then our 3 actionable trade setups. Let's jump into trading view. The first one we're going to take a look at is Tesla. So ticker symbol TSLA is our volatility magnet. Why is that? Well, Tesla is always in play, traders, as we've discussed in the previous videos. Heavy volume, constant headlines, and huge intraday ranges make it a day trader's weapon. So our action: if green at the open with volume, ride it for $3 to $5 pops. If it opens red with heavy selling, short into the first liquidity shelf. Profit, take quick scalps, don't overstay. Tesla whips violently. Exit fast. If it stalls or volume dries up, lock it and reset. Alright, let's go into our second actionable trade setup for Thursday. We're taking a look at Costco, ticker symbol COST, and this is our consumer strength angle. So why Costco? Well, retail resilience plus Costco's stable membership model makes it a fund favorite in uncertain markets. Our action: buy COST if retail ETFs are green and futures are stable. Expect steady inflows. Profit, trim on $5 to $7 gains and let it grind higher through the morning if retail stays bid. Lastly, exit fast. If retail as a group fades or COST loses early momentum, cut and move on. Alright, our last one, ticker symbol NVDA. That's right, it's Nvidia. And this is our momentum ride. The reason for that is that it's the market's AI heartbeat. Every green push and semi starts with Nvidia. Let me hide those draw actions. Alright. If Nvidia opens green and holds, ride it long for the first 15 to 30 minutes as a momentum scalp. Profit, take quick chunks on the first $5 to $10 move. Scale out and only leave a runner if futures stay strong. And exit fast. If it flips red or fails at VWAP, step out immediately, traders. So talking about gold as a hedge, It's a monetary hedge. It isn't just a commodity. When inflation rises, when a currency weakens, or when investors lose trust in central banks, gold becomes a store of value. That's why even in today's tech-driven market, gold is still one of the first places big money parks when uncertainty spikes. So some correlation with yields and dollar. When real yields fall, gold tends to rise because the opportunity cost of holding non-yielding assets goes down. When the US dollar weakens, gold often gains since it's priced in dollars. This means traders should always have an eye on the 10-year yield and the dollar index when trading gold or gold miners. So our practical takeaway for today: gold is firm into the open. That tells us institutions are still hedging. If yields drop further, gold could see another leg up and miners could catch a bid. If yields spike higher, gold will likely pull back and those miners become fade candidates. So our lesson here: always use gold as a cross-check for market tone. If equities are green but gold is surging, someone's hedging risk. Never ignore that and be mindful of the impact gold has on the broader markets and why consumers are using or buying gold. So now let's finish up today's video. Futures versus VWAP. First pullback test tells the truth. Brett at 10 a.m. If advances dominate, trend day possible. If narrow, expect chop and liquidity magnets. Opening range, high low. Prior days, high low. Pre-market extremes. Okay, traders, let's wrap it up. Here's today's playbook. Macro attention still centers on yields and inflation, but the setups are clean. TSLA for volatility, COST for consumer strength, and NVDA for momentum. Trade confirmation. Do not trade hope. Book quick wins and don't carry dead weight into the weekend. Eye sharp, stops tight. Let's make today count. And thank you for watching and joining the video today. Again, I hope it's been helpful. Stay patient and I'll see you before the bell tomorrow. All the best. Take care.